Hello everyone, welcome to Oliveboard. My name is Dinkar and I welcome you all in this session. I hope everybody is doing great, feeling healthy and fine. Once again, welcome to our previous year question session and explanation. And as you all know that you are giving a very good response to our this series. So we are continuing with this series with again this week we have lined up the schedules lecture for all of you. So today we'll be discussing about some of the descriptive question that has been asked. So earlier in the last three classes we have discussed about the objective test, and now we are going to listen about some of the descriptive question and how to answer those descriptive tests. So here we will be also providing you with the points like what exactly you have to give in the examination in order to score the marks. So that is why here we have taken one descriptive question and we are explaining that what exactly you have to write in that question. Okay, so once again I welcome all of you in this session and let's start with the session. Okay, so this question is on the monetary policy framework and the question being asked is write a short note on current monetary policy framework. Okay, so what is the question is on current monetary policy framework of our country. So here you have to explain each and everything related to the current monetary policy framework. So in the starting, how you are going to write? First of all, you have to tell under which act this whole concept has been coming. So here you have to explain that in May 2016 RBI Act has been amended and there was a statutory basis that has been provided for flexible inflation target framework. Okay, so this is a very important point. You have to name this, you have to write this in a proper way, right? Flexible inflation target framework. Right now we have selected like we'll be doing flexible inflation targeting. Now comes what is inflation targeting. Now you have to start telling, like, since we have talking about the flexible inflation targeting, then what is flexible inflation target? Now under section 45ZA, that also you have to mention because this is monetary policy framework is there. So you have to know RBI Act 1934. You don't have to remember everything. Okay, just you have to tell under which act that is coming, and inflation target has been coming under which act? 45ZA. These two words you just remember. Okay, whenever you are getting question on monetary policy framework, just write these two words wherever is required. So we have selected the inflation target based on consumer price index, CPI. Again, the third one is consumer price index. RBI Act 1934, 45ZA and Consumer Price Index, right? So this has been published in the official gazette, right? So we have selected for a period of 5 years from August 5, 2016 to 31st March 2021, which is already over, right? Then we have selected the tolerance limit from 2, that is a lower tolerance limit, to the 6, that is upper tolerance limit. Okay, now this is the next thing that you have to remember. Okay, that is 1934, 45ZA, CPI, then tolerance, lower tolerance and upper tolerance limit. Now, since 2021 has already been passed, now central government has again retained that they are going to follow the same tolerance band for the next 5 years till 2026, 31st March 2026. So these are all the things that you have to remember from this part. Okay, now under section 45ZB, number of members, there will be 6 members that will be there, a monetary policy committee that will be constituted with 6 members, and these 6 members will be deciding what will be the policy rate that will be required for inflation targeting, right? Now if something has happened, right, failure to maintain the inflation target that government has given, like you have to maintain from 2 to 6, right? So central government will notify like what are the things that has contributed like for the failure of achieving the inflation target. Okay, like why the inflation is above the upper tolerance limit, that is more than 6%, or why it is less than 2%. So you have to maintain between 2 to 6, and most uniform, at least you should maintain 4% if that has to be taken care of. Okay, so inflation is more than upper tolerance limit. Government, if for 3 consecutive quarter, if the inflation is above the upper tolerance level, or for the 3 consecutive quarter if the inflation is below the lower tolerance limit, then RBI has to tell. Then RBI has to tell the reason. RBI has to tell the reason for their failure. First of all, you have to provide the reason, then you have to provide the remedial action. Okay, so this is how you have to go in a flow in an answer. Then you have to talk about like what is the estimated time period when you will be coming between that 2 to 6%, right? And the main aim is that we wanted to achieve the operating framework that is aligned with our operation target, which is near about weighted average call rate. Okay, so with the policy rate, we know that policy rate is known as repo rate, right? Everybody know that, and we have to make that weighted average call rate nearby to the repo rate, right? So this is going to be the key determinant of the inflation in the growth and economy, right? Now, what are the pros of this targeting? What is the pros of this target? Okay, okay. So pros. First of all, whenever we are doing inflation targeting, it increases the transparency. Like it is not like something going in a haphazard way or in a total dark mode. People know that RBI is working there and they have to keep the inflation between 2 to 6%, and whatever the measure they are taking in order to keep that inflation within that range. Okay, and accountability is also put over there, right? So this policy rate will be also linked to the medium long term goals. Okay, so RBI has been tasked with a major thing, like you have to keep this under the control. Okay, and people once there is a total control, people will be knowing that yes, expectations are there. That means people are totally like what we call it as, people are in full confidence that we will be not getting unnecessary inflation, like there is no control over inflation at all. So here people are having the confidence, like we will be having some expectation from them. Okay, so there will be no unnecessary inflation and or inflation is going out of control like that. So by providing proper inflation control, we can avoid a cycle of boom and bust. All of a sudden booming has happened, all of a sudden the bust is happening, so we can avoid all these things. Okay, so if all of a sudden the inflation creeps up, then it causes the huge amount of economic cost. Okay, if inflation goes out of control, it again causes a lot of international competitiveness. We reduces the international competitiveness, and also the value of saving got reduced. Okay, then inflation target have a good amount of benefits when inflation is kept under normal. In the normal, whenever economy is going on in a normal condition, then inflation target is good. But there is a lot of confusion and there's a lot of if and buts when inflation target is being taken care of. Okay, so inflation target is like a what we call it as a all of sudden thing, like we have to do it or we don't have to do it. It just depends. Okay, inflation target just depends when we have to do it and when we don't have to do it. But here in our country, we have already fixed that we have to anyhow maintain 2 to 6% right now. That is the monetary policy framework that we have recently created. Okay, then we have some cons of this keeping the inflation targeting so rigid, because if we are giving too much of weight to the inflation, then other goals we cannot focus on that. Like if unemployment might be growing on, we are doing too much of control on inflation, that unemployment is getting high, right? And sometimes it reduces the flexibility of also doing certain things, because if you are too rigid on anything, then you cannot do things in a proper flexible way. Okay, sometimes there is a temporary blip coming, like all of a sudden your economy is moving towards the recessionary work. Okay, so whenever you are doing a good amount of like hard and inflation control, it cannot help in removing the bottlenecks. We have to take care. So if there is any kind of structural bottlenecks are there, so you cannot remove that structural bottleneck by controlling the inflation. Along with the inflation, you also have to check various other things also in our economy. Okay, it cannot help the external shock. If external shocks are happening, oil prices are going how high, all of a sudden there is a high rise in the prices of the goods, you cannot control that, right? And growth and unemployment may also take hit if you are doing too much of control on inflation, because if too much inflation, money will not be there in the economy, growth of the economy will also be stagnant, and employment generation will also be stagnant. So this is all you have to write whenever you are writing any question on monetary policy. Okay, so you have to tell about like the act, then what is the inflation target act, how much inflation target, on which basis inflation target has to be done, then year from which year to which year. Then you have to tell about the monetary policy committee over here, like monetary policy committee, 6 members are there along with the Reserve Bank governor. Then what is the government, what government is saying that failure to maintain, when government thinks that there is a failure to maintain, whenever there is a upper tolerance limit for 3/4, or whenever there is a lower tolerance limit for 3/4, that you have to tell. Then after that, remedial action, what RBI has to take. If there is a inflation that has gone out of control, then RBI has to tell reason, RBI has to tell remedial measure, RBI has to take estimated time in which they are able to control that. Then you have to tell some of the pros, and then you have to tell some of the cons, and then you have to just finish off with your answer. Okay, so this much only you have to explain, and this is very easy to understand and easy to remember. Okay, so this is the first question that we have discussed today. In the next class, we'll be discussing one more descriptive question answer. Right now we are running our 74th Republic Day sale from 24th to 27th of January. 40% off we are giving on RBI, SEBI, SEDBI, Nabard course plan of mentorship batch, complete plan and learn pack. You have to utilize the course R day. As soon as you apply this R day, automatically 40% off will be given to you. If any courses of rupees 10,000, just for example, automatically 40% off, you will get it for 6,000. Okay, so this is how 40% off is a very huge discount that we are providing, because we know that most of the people are in need of these courses. So that is why we have reduced the rate so low that you can easily afford these courses. So guys, please do join the courses and take the benefit of the very good faculty on the Oliveboard, and they will be helping you out in all the ways possible. So thank you so much. I'll be seeing you in the next class. Bye bye and thank you.